Yeah, so introducing myself today, I'm Russell Waite, Investment Director at Capital International. Capital International is a relatively new business to Jersey, but it's a business that has been operating for 30 years. It's 30th anniversary this year, headquartered in the Isle of Man, offices here in Jersey, Johannesburg, Cape Town, and a recently opened office in Dubai. Sustainability is an important topic for us, so we're delighted to be here with Tom. I'll let Tom introduce himself in a minute to talk about sustainable finance on the island of Jersey.
Thank you, Russell. My name is Tom Mckenna, Sustainable Finance Lead at Jersey Finance. What I should make clear about this podcast is that the views I express today are my views, not Jersey Finance's, right? Yeah. But I'm delighted to be taking part today and to contribute, hopefully, to this great podcast. One thing I'd like to start with, if that's all right, is I've been fortunate enough to be enrolled on to a UN Global Compact course called Dialogue for Change, right? And this course is all about understanding what dialogue is, right? So often when people think about dialogue, it's just like a conversation between people. But this course sets out how dialogue's much deeper than that. So it's about like digging down into a discovery process, trying to get the real understanding of messages, understanding perceptions, maybe moving aside preconceptions to get a really deeper learning process. And so often you might not come to conclusions, right? Which is quite a difficult thing for me to take on board because I'm really impatient. I like to get things done, but it's a different way of looking at stuff. And I was thinking because this podcast is midway through that course, it would be great to try and incorporate some of those ideas. So
very good.
If it's all right with you, let's try and do some of that.
Sounds a great plan.
For those listening, we might not come to conclusions, but we may just be answering a few more questions and learning a bit more, hopefully.
I think that sets the scene really well. I think, as you've described, and also bringing sustainable finance to life with practical examples will be helpful for this podcast. So we're going to be talking around, sustainability on the island. Me from the corporate sector, you from obviously your role, what role we each play, and how our relative entities are contributing to progress. I think when we talk about sustainability, there's two angles to this. There's like a personal engagement in it, and it would be nice to hear what your personal engagement was. What got you interested in this topic? And then, of course, from my side, it's how our corporate entities has become or is driving momentum around sustainability. So from a personal viewpoint, what engaged me in this topic? As a child, I became very aware of the hole in the ozone layer, watching John Craven's News Round, 4:45. And that struck a chord with me and wondering, goodness me, that humankind is damaging Earth. And of course, we all know that with that hole being identified in the ozone layer, collective action at government level, collective action at corporate level, it's not solved everything, but there's been great progress in repairing that hole in the ozone layer. So what a great story, what a great story that is. The other thing that engaged me from a personal viewpoint was more in my working life where, and this is in the investment space, where, China was going through its great industrialization and it was sucking in enormous amounts of raw materials, copper, iron ore, buildings, making steel to construct everything, roads, railways, etc. And, some analysis I read that if other emerging nations wanted to reach that level of development as a nation, then we probably need 4, 5, maybe 6 planet Earths in terms of getting there. Now, of course, that's not going to happen. So how are we going to square that circle? That's engaged me personally. Would you be able to give us an insight into what's engaged you personally?
Similar. I think from a young age, I was always really fascinated about the environment, wildlife programs, kind of things like that. And the more you learn about the environment, nature, the more you realize and you understand the problems it faces, right?
Yeah.
And it's a bit of a difficult journey because the more you get into it, the more depressing it can be, right? But then equally, what I found is when you devote more of your time to it, you feel like you're actually trying to make a bit of a difference. So the doom and gloom can have positives because you can see the impact your work or the efforts you're trying to make can do.
Yeah.
And so it helps you feel more positive about the situation, right? And I love what you mentioned about the ozone layer, because I think the issues we're facing around sustainability, they're so broad, the SDGs, 17 of them, right? I think people often make the mistake around sustainability that they think, especially for someone like me, I just love hugging trees, right? It's just about looking after trees, right? But they're so broad, the SDGs, gender equality, water, peace, etc., right? So, but I think they're so broad and massive that often people can feel overwhelmed and like, what difference am I going to make? What difference can an island like Jersey make? We're so small compared to, say, China, for example. But the example of the ozone layer is a great example, because despite all the doom and gloom that we're still experiencing, and it's probably getting worse, that's a real example of what can be achieved if people come together.
Yeah, I think that's a great summary. I think I could not agree more. And coming now to how we're representing our relevant entities, it is, Capital International employs 250, 260 people. We can do our thing. It's not going to change the world, but it's a collective effort, isn't it? And what I'm assuming from your side of the table, it is you're trying to galvanize collective effort, aren't you, locally and then beyond that?
Yeah, certainly. And like I said, I think you explained that really well then. There's only so much you and I can do, or the firms we represent, but it does make you feel much more better in yourself that you're trying to contribute to changing it, rather than just sat there not doing anything about it. And also, I think I was chatting to a young banker yesterday about this. I've going off piste a bit here. And the banking industry struggles more than other sectors in the finance industry to get new people to start in that sector, right?
Okay.
For various reasons. But I think one of the things with finance, and often Jersey Finance does work at going to schools, and I know certainly from when I was at school, there's these preconceptions that you have about the finance industry, right? The old one is like making rich people richer, right? Which is often the case, right? But what I feel like is in sustainable finance, yes, you will be doing some of these things that finance has always done, but there's a real positivity to it where you can get real fulfillment from your role in finance. And I know from my discussions with you certainly get that. I know I do from my role, and all the other people in the industry who are contributing to that. It gives this like fulfillment and satisfaction in your role that you may not have thought was possible in the finance industry to some with those preconceptions.
No, I think that's all. Again, that's a great segue into, if I say a little bit more about what Capital International does. And when we come to work each day, our objective is really to make money work better for our clients, for our people, and for our communities. So, how do we express that? Well, we have this overarching philosophy that helps operate the business, which we call conscious capital. And, it guides us in terms of decisions we make, investments we make, and how we grow. And, it's a very, very powerful framework. And I've really enjoyed working in that, because whether I'm thinking about a governance issue, whether I'm thinking about, dealing with a particular client issue, dealing with my colleagues in the office, other important counterparties such as Jersey Finance or our regulator, the values that are embedded in conscious capital, just kind of that North Star. And myself with my colleagues comes back to that collective approach to addressing issues that we face as a business. Now, how does it actually get reflected in our business? Well, we have 4 pillars around conscious capital. One is how we invest money responsibly for our clients, those that are giving us a mandate to either invest responsibly or one step further, invest sustainably. It shapes that decision making. It shapes us around financial well-being. So whether that's the financial well-being of the clients that we're dealing with, or the financial well-being of Capital International itself. We want the business to be profitable. If the business is profitable, we add to the prosperity of the communities in which we're operating. Our people, we can pay competitive salaries to, etc. So financial well-being is very important to us. Obviously, all the issues around climate, what contribution can we make to try and mitigate climate change? And then fourthly, which I know is where we've worked together quite a bit, is impacting communities. And, the great work that you've been driving around, the Greening Trust. We're very conscious that in all the jurisdictions in which we operate, we have a role to play in helping support those communities.
Yeah, and I won't go into Green in Jersey in a lot of detail here, but I think the big thing that people need to understand about an initiative like Green in Jersey is it's not just CSR, right? It's not just firms giving a bit of money away, right? This is an investment by the firms, right?
Yes.
Where they're investing in the island. They're investing in climate, nature, biodiversity.
Yeah.
They're investing in their health and well-being of their staff. They're investing in the island so that we can retain and attract more professionals.
Yes.
We're making the island more productive for farming, by enriching the soil, etc. Stopping erosion, so that's a really great initiative that's got huge momentum, as you know, and you guys are a big part of that. But it's great because it's showing that it's more than just CSR, it's investing, right? And we feel the firms, although they contribute to it, they're getting more back from that contribution.
Yeah.
So Jersey Finance has this 2030 vision, which is for Jersey to be recognized by its clients, stakeholders and partners as a leading sustainable international finance center in the market it serves. I've been at my role at Jersey Finance for over 3 years now, and certainly when I started, it felt like there was this triangle going on. And this is making it really simple, right? You've got the government at one point of the triangle, you've got the regulator, and you've got the industry. And so I felt when I started my role, I was in the middle here between these 3 points on the triangle. And often I'd hear the industry saying, look, we want to do more around sustainable finance, but we've got so many regulatory demands, we're just keeping our heads above water. And until this is made a regulatory requirement, we're not going to do more on it, right? Then you've got the regulator saying, we want to do more around sustainable finance, but we won't do it until the government instructs us to do it. And then you've got the government who is saying, right, we know it's important, we want to do more around sustainable finance, but we won't do any until the industry puts pressure on us to do it. And I was sat in the middle going, oh my God, like, how can we break this circle with it? And I suppose since then and more recently, there's been the developments about the Sustainable Finance Consultation, there's been the Sustainable Finance Action Plan, and then on the back of the action plan, because the way we work in Jersey, there's certain points that went to the regulator and then they have to do further consultation, right? And on the back of all that, there has been a lot of progress. For example, you'll be aware the JFSC have released their Sustainable Finance Guidance Paper, which has been about anti-greenwashing and sustainability risk management. We've got a lunch and learn on that shortly.
Very good.
Which is great. So we're in the process of upskilling the industry on those changes and the guidance and how it's going to impact them. But I think despite those changes, there's still elements of this triangle going on, right? Where people are going, I want to do more, but I can't because so-and-so is slowing me down, right? And what I've learned, and I know from you and your values, is that it's so easy to point the finger at someone else and go, I can't do any more because of them. But we all can do something, right? And we're not as dependent on other parties as we think. And I think I often say this to the future sustainable finance leaders, that there's always something we can do as individuals and our firms, right? And I think it's great to be on this podcast with you because Capital are a great example of a firm that despite this triangle that you often see, they're doing it regardless. Right? And so it's great to hear a bit more about it today.
That's very good. Well, it's kind of you to say that, and you're right. It is... before all we're aware there's a myriad of, taxonomies and regulations out there, and it's very easy to get quite, buried is the wrong word, but you can get very intertwined in all of this, can't you? And actually lose the end purpose. And at the corporate level, something I wanted to mention is, at the end of the day, all we're trying to do is be net positive in terms of creating sustainable value for all our stakeholders. And an important thing in this, and perhaps we'll come on to it with the later discussion, is, there's that saying, isn't there, that what isn't measured doesn't get done.
Yeah.
And we'll talk about things more broadly around that. But for us as a business, we've adopted the World Economic Forum metrics around sustainable value creation, and we spend time looking at, how are we contributing or helping to mitigate the impact of climate change? What are we doing in terms of our people, whether that's training, whether it's health and safety issues, whether it's mental health issues, all of these kind of things, which again, all brought together in metrics, illustrates that you're trying to make a difference as an entity. And I think if you are doing that, and you talked about earlier people moving into this industry, if you are a business that is doing the right thing, A, you should be profitable, but B, you will attract talent, you'll attract the right kind of people, and that's important for us.
Yeah, definitely. And I think just maybe it's worth me being a bit clear on saying everyone can make a difference, right? Because I think certainly some people can feel, a bit lost in this space. But you can make a difference as an individual yourself, but then also by influence the firm you work for.
Yeah.
Right. You could create a sustainability team if your firm doesn't already have that.
That's it. Yeah.
Equally, you could be part of trade associations, and then if you can make your voice heard as an individual, you can do it in firm level like you guys do.
Yeah.
And then connected to trade associations, and then when you have those wider relationships, then especially getting your voice across to the likes of the government, the regulator, is so much more powerful when you do that and come together, because there's so many groups that you and I are part of, the Sustainable Finance Steering Committee, Jersey Banking Association, Sustainable Subcommittee, Future Sustainable Finance Leaders. There's so much where you come together with collective minds, help each other out, and it really amplifies your voices. And so there's so many avenues like that people can get involved in if they feel like they're just on their own because you're not right with it.
I think you make a fantastic point there. And I know in a couple of meetings we've had over the last few years where, this topic has had some headwinds, hasn't it? More recently, with a real rise in anti-ESG rhetoric. And I know we giggled a bit because I actually enjoyed coming to the meetings that you were hosting because, I could spend an hour and a half in a room with a collection of individuals who remained steadfast in pushing this momentum forward. And that was, powerful messaging for me. And I think you guys have done a good job there.
Yeah. No, thank you. And I think one thing that people underestimate is the importance of airing your views and your voice, right? Because it counts, right? I could be at the meetings with people who are saying, we're just not hearing it from industry. But I will be, because I'm having meetings with members or doing podcasts like this or various events, etc. And I'm hearing these voices all the time, but it's not going to do any good if we're just grumbling to ourselves under our breath or moaning to our family when we get home. You've got to air your views, and there's obviously been consultations recently, but there's nothing stopping you sending an email to the government. And also, obviously, we're in the midst of the local elections, right? And so now more time than ever is so important for people to engage in that process. And I'm sure you're familiar with this. Vote.je has so much information around the Jersey election, and the importance of voting can never be underestimated, right? So it's a real call to action to people there to get your voices heard. And I think what I've really learned in my role of sustainability, I think it always surprises me, and I don't know why it always continues to surprise me, but more often than not, I'd say 90% of the time, when someone in whatever setting you're in, the pub, having a meal, at the bus stop, if someone mentions something relating to sustainability, I'd say 90% of the time someone jumps in and go, oh yeah, I love this bit, or I'm big on this. And you often think it's just yourself battling away at it. But I think, like I mentioned, the broadness of the SDGs, someone's got some interest in those SDGs. Almost everyone.
I couldn't agree more.
There's a few individuals on a global scale who probably don't, or want to pretend they don't, right? But, it's so important to... It sounds like courage is too strong a word, but it is having that courage to start those discussions.
Absolutely agree.
Set it off, but you'll be surprised how much people are interested and supportive.
It is, and I think it's a good topic for us to explore a little bit more, because the language around sustainability has been, has really had to adapt, hasn't it? Again, going back to, what's been happening previously, there was a lot of acronyms in this space. It became almost very academic. It became stringently compliant.
Anonymous.
Yes. Yes. There was a myriad, wasn't it? An absolute alphabet soup, to use that phrase. And I think now there is a recognition that people don't want that to be, to be told all of this. They need that practical, those practical examples of actually where sustainability is really mattered. It really matters. And there's this increased use of resilience now in our space, isn't there?
Yeah. I think it's a really interesting topic because especially since the start of 2025, the language has changed significantly, like you said, and it's reframing. And, if you go back 3 years, it was all ESG.
Yes.
Then probably more recent, it was sustainable finance. But increasingly, that's not used, right? And you're using words like resilience, more. But I think there's a danger for me in that people are changing the language and reframing the debate, often from the attacks of the anti-ESG movement, right? A lot of it in the US. And for me, there's a danger of doing that. And I understand the reasons for doing it, right? Because you're trying to avoid litigation, you're trying to increase the mobilization of capital and to stop firms having those challenges, right? So they continue doing the good work. But the danger is, especially from my position, is that because of the greenwashing or the anti-ESG movement, there's a lot of green hushing going on, right? And because of that, people all around the world in quite important positions are going, right, it's not happening anymore, so why should we continue to support it? And then you lose this momentum. But I know certainly from the work I do with industry and then events I go in Scotland, connected to various places around the world, it is still happening, and the data is showing it's happening.
Yes,
but it's just happening more quietly, right? Because of this fear of getting attacked by this anti-ESG rhetoric. And I think as well, the other thing, and you touched on that, changing the language all the time has such a negative effect as well, because it is such a confusing, fastly developing area, right? And it's so hard even for people like you and I who work in this space to keep on top of all the acronyms, all the terminology. So I think I understand why some people want to reframe it, but I'd say about a month ago, I heard Mr. Trump call environmentalists terrorists, right? And so for me, when I heard that, I was like, right, there's got to be a time when we say enough's enough in this reframing. So we're not allowed to use environmentalists anymore, right? So we've got to go, right, there comes a stage where we've got to say, let's say what it is on the tin. I think that's Ronce was.
It was,
right? And just call it what it is, because the more we keep reframing it, the more confused people will be. I think in this space, in sustainable finance, it's often a danger that the people on the ground, like your farmers, the miners, etc., think it's all for the academic scientists, etc., and they feel so alienated by it. And when they're trying to, those people are trying to give messages to those on the ground about why they should do this and that, they're like, well, who are you to tell me? I've been working on this pitch of land for hundreds of years. My family have, right? So, who are you in your ivory tower to try and tell me how to act? And so I think we've got to make the language more understandable. And there's and like I said, I understand the reasons why people have been reframing it, but I think there's a lot of cons to doing it, and we've got to start thinking, are we just overcomplicating it? And when is enough enough?
Yeah, I couldn't agree more. You go through a lot of good stuff there, and our journeys through. It's nice to share this conversation because our journeys have been similar, and we've come up with, sometimes identical conclusions, other times not so. But that's this topic, isn't it? Sustainability is subjective in many ways. And I not to dwell too much on Trump, and perhaps we won't, and we can come back to him a little bit later. But I do think, as well as the acronym space, we went through this period where some outrageous claims around impact and sustainability metrics were being made, weren't they? And I can kind of, I don't know whether you can forgive, but certainly in the financial services industry, a momentum built around publishing impact reports, regular impact reports, and, a demand for these to look, incredibly well presented and incredibly informative. But, some of the issues around that, I can give an example where and this is going back a few years now, where an investment manager came to us, and she was explaining some of the issues she'd had around collecting metrics and publishing things. And she had a global equity portfolio, and she'd sent it off to a third party firm to analyze the carbon emissions associated with that portfolio. And it came back, and she was reviewing it, and there was one company where the emission score was enormous, and she thought, I can't quite work out why that would be, because it's a biotechnology company and making vaccines. So she challenged the auditor here, the carbon auditor, so how have you arrived at this figure? And they said, well, you're producing vaccines. Those vaccines are saving lives and extending lives. Therefore, those individuals are living longer. Therefore, they're burning more carbon. Therefore, you've got that spike. And she said, well, by that logic, I should be investing in tobacco companies because they're shortening lives, less carbon. What do you make of that? And the polar opposite views, and I know which one I would agree with, but it just illustrated the differences around reporting metrics, didn't it? So it was a real catalyst that we needed some kind of harmonization. But then we went down this route of it becoming so granular in terms of numbers, and the onus on data collection became overwhelming. Didn't it? And you must have heard a lot of pushback around that.
Because I say, especially since the start of 2025, there was a lot of talk about deregulating, right? And we started talking about it earlier about how, despite that triangle I mentioned, there's firms like yourselves who are still doing it, regardless of regulation or any other requirements, for the various reasons you mentioned, right? And I suppose the question I had for you is that, yes, there are firms doing it, but will you ever get the laggards to do it unless there is these regulatory requirements in there? I don't know. Right?
I think you're right. I think what the island has done, and I know you've been a catalyst around this, is being that word being proportionate, isn't it? Because there's there's a whole range of different sizes of business, and those that have a lot of resources can collect a lot of data. Those that are smaller can't commit that same resource. So finding somewhere in the middle has been tough, and it's taken a few years for the island to arrive at a framework that caters for both sides of that line, I think. But I think it's got there. I think the recent guidelines published are proportionate with what the business can do and the appetite to deliver. Are you supportive on that?
I do, and I think, just going back on the regulation, because I didn't really answer your last question. I went off on another tangent, right? So in my role, I work quite closely with the Channel Islands Brussels office. So they're really close as anyone I know to what's going on in Europe. And there was a lot of talk at the start of 2025 about deregulation, right? And the EU omnibus and scaling that back, right? And they were really clear. There was different messages coming out, but at the last meeting we had with them, they were adamant that what the EU was doing is not scaling back, it's simplifying, right? And I know I've been at all kinds of events. The last one where they spoke about in incredible detail was the Global Ethical Finance Initiative, and they were saying what the EU doing is just simplifying it. And because of the type of things you said, yes, the sustainable finance world has got too complicated, and there's that much regulation in some parts of the world that is stopping firms doing what they need to do in terms of the mobilization of capital to the sustainable development goals. But there is a balance to be had, because if you don't have some in place, then you don't get the laggards doing it. Also, you don't get maybe the momentum you need as quick as you need it to do. And also, if you don't have them in place, and the big thing for me is, and it's really simple, is you lose trust. Right?
Trust is so important.
And you lose the credibility, right? And it's such a shame, because some firms will always do the right thing regardless. Some firms will genuinely make mistakes, but some will try and cut corners, right? It's the same with like humans, right? But and so it's a really difficult balance, because you need some regulation to ensure you have that credibility and trust, because if you lose that, then it can unravel so quickly.
Spot on. Trust and credibility is absolutely key in this, and I think, as well as this space has matured, whether you're a practitioner or whether you're an investor or whether you're a regulator, wherever you might sit, you're realizing that if you're mobilizing capital for impact to be net positive, things don't change overnight, or things don't necessarily change in 1 year or 5 years. Some of these things are generational change, aren't they? So to be reporting metrics half yearly, annually around some of these things becomes meaningless. And therefore that was justifiable pushback. But then you have that side of the equation, as we mentioned earlier. If it doesn't get measured, it won't get done. So I think the industry is arriving at a place where it's kind of getting that balance right. It's not going to be perfect, but I think it's kind of got us all coalescing around a sense of direction now, don't you?
Yeah, I do. And I think we've talked a few times about greenwashing, right?
Yeah.
And greenwashing has made my life hell
at
times, right? Because we want to promote what the firms are doing in Jersey, right? And you know, when some people are suggesting there's hesitation around sustainable finance or to pull back, like I said, the data is showing it's all going in the right direction. Maybe not as fast enough as you and I would want it to, but it is going in a positive way, right? But we just need to be more confident and courageous to have that dialogue and continue it. And I've said this before to you, I applaud Capital for their efforts in continuing the dialogue. I remember I mentioned the Global Ethical Finance Initiative, and this is just an example of the complexities around those type of conversations. That there was a gentleman speaking at this event who was part of one, I think he was head of one of the largest banks in the Netherlands and a real leading bank around sustainable finance, right? And they were doing incredible things around sustainability, but they got attacked by a leading environmental charity. Because some of their efforts, you know, they were being critical of it, right? And so this guy called them and said, look, what are you doing? You know, you can see that we're genuinely trying to make a difference. And this environmental charity said, we can, but if we can get your name like in the headlines for it, we'll get more attention for doing it. And so it's just a crazy situation, right? Because, you know, I'm supportive of environmental charities and initiatives generally, right? But when you're doing that, it's so self-destructive of the efforts we're trying to make as a whole. And this guy spoke at this event saying, as a result of those attacks, and I hope I'm explaining this, okay? They're saying they met as a board and said, right, what do we do? Do we just stop speaking about it and pull back? And they decided as a board, no, it's the right thing to do, to continue to have that dialogue and communicate their efforts despite risks of challenges. So, you know, I think firms like yourselves, you regularly release your reports, right? And continue that dialogue. And it's so important to do that because it stops people thinking sustainable finance isn't happening. And not only that, but it inspires others to do it. Right. And there's so many good news stories out there. And, you know, you attended our Sustainable Finance Awards, and maybe later we can talk about that, where I can go into a bit more detail.
No, definitely. I think that's good. You know, to conclude this section, I think we arrived at a point where, notwithstanding the World Economic Forum metrics that we collect and report on, but for our investors, because we're mobilizing capital, as you know, to support the Sustainable Development Goals in our Better World solutions, we had a myriad of, to use that word again, a myriad of metrics, and we've settled around 3 metrics, and we're just plotting the progress over time. And again, there might be periods, depending on where we're asset allocated and where we're seeing opportunities, that the metrics might go in the wrong direction for a period, but we're knowing that over time it will make a substantial change. And we'll carry on doing that. But, you know, I wonder whether it might be useful now to start thinking about some of the practical examples to bring this to life for people and what we're doing in businesses. We could perhaps come to communities at the end, because we'll have some good things to talk about. I was going to give a couple of examples of how we're applying you know, sustainable finance, responsible investing thinking in areas that might not necessarily immediately be thought of as, why would you be investing sustainably here? So 2 examples are actually mines. And I was mining businesses, and I was lucky a couple of weeks ago actually to go and almost do a due diligence audit of a mine in north of Johannesburg. and this mine is a platinum mine. And it's been mothballed because the price of platinum fell, because ironically, the idea was that lots of people were going to buy EVs, so therefore internal combustion engines and the use of catalytic converters, etc. And this is platinum palladium group metal mine. The price fell enormously. Now, of course, things have changed. The EV demand for EV is still there, but it's climbing at a slightly slower rate. And I think more and more people are interested in using hybrids, aren't they? Kind of in between whilst we go on that path. Anyway, this mine, from being mothballed, is being opened again. So, we all know mining, whichever form of mining you do, you're digging holes and creating a lot of mess within the environment. So it doesn't immediately strike as an area that you should be thinking about. But as this is a mine that is being restarted again, first and foremost, it's going to bring 2,000 to 2,500 jobs back to that area. How important is that from a social perspective? Also from a governance perspective, and again, when you start to dig using the word regarding mines, but scratch below the surface, health and safety is key in mining, isn't it? And I walked into the entrance at the mine, and there's a big plaque there saying 7 million fatality-free shifts. So this business is very focused on keeping its people safe. And then the final thing I'll mention on that is in South Africa, and we'll have all have read this, that there's been lots of blackouts over periods of time, hasn't there, where electricity, there's just not been enough load or enough electricity to cater for the load demand. So this mine has its own substation from Eskom, which is the utility providing electricity. They've then, because it was so unreliable, they then had to build a diesel generator, which, as we all know, is not going to be the most carbon friendly in terms of emissions. And of course, we're in a world now, going back to resilience, where the price of diesel is going up because of what's happening in the Middle East. So this team is potentially looking at using a solar panel solution to power the mine. So all of a sudden, you've got several issues around sustainability which are critical to the performance of that mine. And, for me, that's bringing sustainable finance or sustainable considerations to the commercial viability of an entity. Now, I've got another example to give.
But it's such a good example because, when people who aren't close to sustainable finance hear about an investment in a mining company, like, oh, what are you doing? You can't be doing that because it's extractive, right?
That's it.
But there's, to put it simply, good mining companies and less good, right?
That's right.
And, especially when the mining is for something that's going to contribute to the sustainable finance efforts, EVs, etc., then, that's essential for the shift to a low carbon economy, right?
Yeah, it is. And exactly right. And on a very similar theme, another mine as an example, which is a mine in Canada, which is producing graphite, or just about to start producing commercial loads of graphite. And that example is quite interesting from a sustainable finance viewpoint, because it is right next to a hydroelectric facility. So all the power is clean. So that's a great example. Canada, as with a lot of North America, the indigenous population there have been consulted around where it's going to be built, jobs available for that community and the wider community. So again, a big positive there. And what is being mined is graphite, which is absolutely essential for batteries, battery storage, energy storage, and the whole energy transition story. So going back to your point, it's extractive, but there's thinking around those sustainability issues, which for us makes it an attractive investment.
And I'll just comment on, because you mentioned the mines in South Africa. I know, and I've been lucky enough to meet quite a number of people from South Africa who work in Jersey now. And every one of them I've met is so committed and knowledgeable around sustainable finance, right? And there could be a number of reasons for that, but often when you start discussing it, it's sustainable finance to them, and the efforts around sustainability aren't, altruistic reasons and nice to haves, right?
Yeah.
It's so essential to the daily lives there, you know, because you mentioned like the blackouts, how close they are to the nature there, you know, and there's times where there's, like I said, the blackouts, but also severe water shortages, right? And
absolutely.
I'll probably get this rhyme or this song right that they're saying, and I won't sing, is they even have times when they were at school and there was rhymes that you had to learn. It was sort of like, if it's yellow, let it mellow.
Yes,
right? So you don't flush the toilet then, right? And it's
such a precious commodity.
Such a precious commodity. So they're closer, they're on the edge of where it really makes a
very
difference.
Real, isn't it?
We're so sheltered here in Jersey that we see it as something that may happen in the future and may affect us. They know, right? And so they're more invested in it and a lot more committed to it. Well, certainly some of the ones I've met.
I couldn't agree more. Yeah, and again, it links into, you know, everything today in our lives is linked to artificial intelligence, the digital revolution that's underway, but you know, all of that is incredibly reliant on physical resources, be it copper, be it nickel, be it graphite, all these, and they have to be mined, don't they? So how those two come together is, you know, I think for me, in an idealistic world, when I would have first started thinking about sustainable investing, you wouldn't have gone near fossil fuels, you wouldn't have gone near any kind of mining entity. As you, again, explore things further, you realize how essential that is. The resources are very important. So it is a viable investment place for us. You know, in terms of other topics, you've talked a little bit about what's happening in the community here as the financial services sector. Can you give us some examples of that momentum?
I've spoken a lot about greenwashing, right? Right. But like I said, when I meet members like yourself, I'm in such a fortunate position that I'm just so much positivity from the work they're doing, but others aren't hearing that. And it creates that idea that less is happening around sustainable finance, like I mentioned earlier. But we had our Sustainable Finance Awards ceremony on the 30th of April, and the Sustainable Finance Award ceremony were such a fantastic illustration of how much is going on in sustainable finance in Jersey. Right. So there's loads of reasons why we have the awards, and I'll go into that in a bit more detail. But in terms of some really basic metrics, right, that award ceremony, despite all the hesitation and negativity around the world, anti-ESG rhetoric, had more registrations and attendance at the event than we've ever had at any of our awards ceremonies before, which is fantastic. And this is the 4th award ceremony, right? And also in terms of entries per category, we were the highest by far, right? And there are different variables, you know, we've had different awards at different times, right? And different categories, but you know, they're great illustrations. And I think it'd be interesting to get your views on how you found the ceremony. Obviously, you guys were very successful at the ceremony, so well done again for that. But it was a great event, and we changed the format of the ceremony. So we tried to communicate some of those fantastic stories during the ceremony, which was great as well. The feedback we've had from the night was amazing, and we're now in the next stage from it. So it's all about getting those entries turned into case studies, so we can communicate them to the industry, to inspire and galvanize them, show us what's possible, so you know, they can hopefully learn from the challenges firms like you may have had and how to overcome them. But the big thing for us, especially, as you know, Time to Wins was launched, and the report's out for everyone to digest, right? And that's putting a greater emphasis on Jersey finance and the island as a whole to get better on externally promoting ourselves, right? And so on that, some of these case studies will be fantastic material for us to communicate what we're doing in Jersey around sustainable finance and all the expertise we have. Not that you know, so-and-so's got this qualification, but he's already been involved in this transaction, which is, you know, 7 million loans have been made to small businesses in Africa, supporting the Sustainable Development Goals, for example, right? It's such a useful tool to do, right? And so although there's this negativity and hesitation around greenwashing, this is a fantastic way to get out of that cycle and get more case studies heard. And I'm also part of the City UK's International Climate Working Group, and they're developing a Team UK playbook, which is all about promoting the UK for sustainable finance. and they're looking for case studies on that. So I sent them a few of our case studies that we've already got live on our website, and they've selected one that they'd like to feature on that. So again, it's a great way to get our story heard and show the expertise we have here.
Isn't it just? Yeah. Well, it goes back to how we started this conversation. Your excellent intro. It is all about storytelling and communication, isn't it? Very, very much so. And I, as an attendee at those awards over the last 4 years, I would agree the number of attendees is growing. Obviously, the quality of the submissions, as you've conveyed there, is getting much better. And it was great for us to win awards, and we're very supportive of that. But I think it's a wonderful platform to showcase the expertise on the island and what is being done, which is your point. Another point, going back to what we said earlier, sustainability is all about collective action. And when you listen to those stories and you talk to people before or after the ceremony and publication of the case studies, you kind of galvanize momentum around that. And again, I think those awards are a wonderful example. And you've persevered with those, I'm sure, because it's been hard work. And the judging panel, they have some strict criteria, don't they, to ensure that there is genuine credibility around who's winning those awards.
Yeah, definitely. And it was really satisfying the way it all came together, I've got to say. Because you're right, there's a lot going on behind the scenes to get to where we did. And I have to applaud all the Jersey finance team that aren't on the stage, right, that you don't see
very
behind.
Professional.
So
very
great
professional.
But I think and we've touched at this at times, but maybe in not a lot of detail, that on a global level it's still happening, right? So I've got a few examples of that. So you'll be aware of the TNFD. We had David Craig speak, co-chair of TNFD at the award ceremony. And he gave a great example of the momentum around sustainable finance in terms of the adoption around the world of the TNFD in 2025. That increased by almost 50%. Right, that's incredible, right? And then also I mentioned the City UK working group I'm part of. They showed a stat at the last working group meeting which said 70% of FTSE 100 companies have already voluntarily developed many of the key elements of a transition plan. Right, that's amazing.
It is.
And I think as well that one thing in terms of momentum and trends that I'm seeing is that now sustainable finance is done for economic and the business reasons, right?
Absolutely.
Before people question that. And I think, I know certainly because the elections are going on locally, you hear some discussions and rhetoric where I had one recently, it was saying, someone said, and I won't go give the whole like paragraph of what he said or the question, but it was something like Jersey contributes 0.001% to the environment. Why are we trying to tackle climate change and spend our money on it? Right. And then you hear ones like humans only add X% extra carbon. Net zero is a load of crap, right? Excuse my language. And I'm sure you've heard those type of comments before, and maybe we can come back to that. But for me, like I mentioned, what is driving the change now and the trends we're seeing is that, and this renders those rhetorics obsolete, right, is that it makes business economic sense to do it, right? And so going back to City UK, that it's 3 times faster growth in the UK's net zero sectors than the overall economy in 2024, right? That's incredible, right?
It is, isn't it?
And then in many parts of the world, and you're already close to this, new utility scale solar is now among the cheapest sources of new electricity generation, cheaper than new coal, gas or nuclear plants in most parts of the world, right? And then I'll talk at a personal level, right? I'm hopefully completing on a new house soon, right? Selling our house.
Fingers crossed.
Yeah, fingers crossed. And then one of the first things I want to do is get off oil and go onto solar panels.
Right?
And so the latest quote we've had from this firm is that if we get solar panels put up on our house with the battery we want to get as well, which helps us use the solar energy throughout throughout the year and when it's dark and cloudy, is that we'll get a return on our investments on the projections in 4 to 5 years.
Well,
that's so it just shows, and I know I'd be fortunate to do it because I'd made that investment up front, which a lot of people can't do, right? But that's an example that, there's initiatives in the UK where all new houses from next year, I think, will have to have solar panels on them. And sometimes people criticize that and go, why are we trying to do this? But we're trying to do it for sustainable reasons, but also because it makes economic sense, because in 4 to 5 years, that return of investment will be realized, and then you've got less reliance on global trends and turmoil that we're seeing.
I couldn't agree more. And I think it's a good point for us to finish on now is, the commercial, sustainability, sustainable finance is increasingly making financial sense, economic sense. The energy transition story is moving into the energy security story, isn't it? That resilience that we mentioned about earlier. And, at all levels, cost of living issues, if you're generating your own electricity, and, we don't want to inhibit the revenues of Jersey Electric here, or the Jersey Electricity here, but it helps your cost of living, your budgets, doesn't it? And all of these things coming together are an illustration that if you are investing in this space, or whether you're using it practically or being an investor and allocating capital, you can make strong returns.
I'll say one last point, because I think this is a great one, because my wife was showing me her pension the other day, right? And it's through Capital Sustainable Growth Fund. Right? And I was blown away and very jealous of it. That since June 2024, the returns have been 19%.
It has.
And that's another example of the business case for doing this.
It is. That sustainable solution now in the capital world has been rebranded as Better World, but it's the identical solution.
Sorry.
No, not at all. It's the Better World Growth solution. And it's very kind of you to mention that. It has become a very, very rewarding place to allocate capital. And for long-term savers in a pension, for example, it's an ideal solution. So thank you, Tom. I've really enjoyed that conversation.
I have as well. Thank you, Ross.
I know we've whizzed around the world and covered a few topics, but it's been very enjoyable to spend some time with you.
Great.
Thank you.
Thank you very much.